Hello everyone, welcome to Elliottwave.com YouTube channel. Today is October the 23rd and we're looking at the DAX here as the chart of the day, 60 minutes time frame. Now we can see we finished with 2 in the minor degree here, with 3 over here, and this is with 4. So now as long as we stay above 23,682, we can see more upside. You can see a couple of things from this short-term chart here. Okay. The first one that we can observe here is the idea that this pullback doesn't look like a 5 waves to me, right? I don't know about you, but it's clearly corrective, right? So this cannot be labeled as 1, 2, 3, 4, 5 here. Okay, it's not even possible. You can see this is shorter than this, and this is longer than this. So if you label this 1, 2, 3, 4, 5, your 3 is going to be in the shortest wave, which is not possible, because that will be in violation of the Elliott wave. And then you can also see the RSI has no divergence. Usually wave 5 has a divergence. So this doesn't look like an impulsive structure. This move down doesn't look like a 5 waves, doesn't look like a diagonal. It's basically not possible. So this looks corrective, which implies that the market is still bullish. Because if it is not bullish, you would have expected the DAX doing this. That's an impulse. 3, 1.61 of 1, and then a clear 5 waves. But this one is a correction, structure-wise. So eventually we are looking for a break above here. Now, shorter cycle, it's still a possibility that we might be doing a double, which is looking like this. A lot of you guys will be, oh, this is a zigzag or double, right? The thing is this, guys. If you want to have a specific bias because you have a stake, then no matter what the market is doing, you're gonna come up, no, it's a zigzag, no, it's a double, right? But if we just being rational, right, and not having any specific biases, looking at the market objectively, and then looking at the entire market, and then see what is the more likely scenario, then we will have to say, well, this is corrective, it's ending. So is there any reason for me to call this down when you know the market is still bullish, right? It is still bullish. It's still making new high. So nobody will say, oh, I know how to pick the top, right? I mean, when you try to do that, a lot of people trying to pick the top since many years ago. So it's like it keeps making new high. So it's not useful to do exercise like that. Trend traders is always going to win because they follow the trend and they just buy in the dips or sell the rally depending on what the trend is, and keeps making the right call. They're going to be wrong only at the last stage, but most of the time they're going to be right. So here we know that this is corrective. Most likely we can see more upside still. You can also see the rally here looks impulsive, right? It looks impulsive. So that means you have what looks like corrective structure here, what looks like an impulsive structure here. So most likely we're going to extend higher above 23,682. Now, what I want to show though is the larger time frame, which is interesting. So if I copy this with 3 and 4 here, this is 3 and this is a 4. Okay, so now the DAX, the structure is quite ugly if you compare it with other indices, right? This is the April low. Everybody knows the April low. Every indices made a bottom in the April low this year. Now the question is, where are we? Are we in wave 3 from here? Like if it is in wave 3, this is your 1 and 2, for example, and we're gonna be in a massive wave 3. It's gonna go to the moon like this, where we're just gonna be maybe. Now, first of all, if you're familiar, if you're experienced, you know this looks like a diagonal, right? I mean, it's so obvious it looks like a diagonal there. Now the diagonal depends on what you want to think of. Do you think this is within wave 3 from the April low? If it is within wave 3, then how can it have a diagonal here? That diagonal will be a part of wave 3 then. So let's say this is ending with 1 of 3, and then do this and then accelerate like this in a 3 of 3. Or if you are not as aggressive and you think, well, I don't see any reason why thinking this is still with 3, right? And because this one is very shallow, so I will say that this is actually wave 5 from the April low, which is kind of consistent with what we've been saying in other indices. If you follow our channel, right, we've been saying that we are most likely in the wave 5 from the April low in other indices. So that will be consistent with what we said, right, in other indices. Now, if that's the case, then let me copy this. This is wave 2 here. Right, this is wave 2, and then this will be kind of your wave 1, and then so that means this is some sort of 1, 2, 3, 4, and then you're looking for 5 to finish 5, and then we can then finish this entire cycle and see a bigger pullback after that. Okay, so if you go along with this idea that this is a diagonal, right, so that means this is the higher degree 3 and 4. This is higher degree 3 and 4. When we are basically at the last stage where we're going to be ending with 5. Once we finish with 5, that will be ending 5 here, and then you're going to see a bigger pullback after that. All right, then we can see a bigger pullback. And don't tell me again, oh, there's an overlap. Overlap is fine in a diagonal, guys. Overlap happens all the time, so don't get confused with overlap. Ending diagonal, right? Ending diagonal looks like this, right? Here. So it could be either within wave 5, like this, looks like a diagonal, looks like a wedge with overlapping 1 and 4, or it could be in the C leg of an ABC. Now, the subdivision of the ending diagonal, well, at least in the EWF, we don't differentiate the subdivision. So it could be 3 waves like this, or it could be 5 waves. It doesn't matter for us. What matters for us for a diagonal is the position within wave 5 or wave 1, or within wave A or within wave C. And then what matters for us is the overlapping between 1 and 4 in the subdivision. The subdivision itself doesn't matter that much. It could be 3, it could be 5. We take it. It doesn't affect us, right? So again, what matters for EWF or diagonal is the positioning. It has to be within 1, 5, A or C. It cannot be within 3. And then it has to have an overlap in the subdivision. The subdivision itself, it doesn't matter. It could be 3, it could be 5. Okay, so so that's where we are. We are basically within this one. We are looking to finish this one, 505 here. That's exactly where we are. So we are looking for 505 up, and then once it is complete, then we should be ending this. You can place 1, 2, 3 here, right? 1 here, or 1 here, or even here, something like this. And then you're gonna see this cycle finish and see the biggest pullback. Now, if you take a look at it from here, right? If you take a look at it from here, and it does kind of look like, depending on where the 3 and 4 is. If you put it 3 and 4 here, this is only 3 waves, which is incomplete, right? Which is incomplete, and therefore needing one more leg up. So you might ask, well, is there any other way I can call the entire cycle completed? Well, there is always a way, right? I mean, if you want to do that, you can, let's say, place 3 and 4 here and call 5 here. Now, if that's the case, then we have already ended this cycle and then can start seeing a bigger pullback. But still, though, I would say if you look at the day in the 1 hour, this cycle is corrective. So I don't know why we need to be worrying so much about you know, like a big sell-off kind of type, because we can see the pullback is still corrective and the rally is still impulsive. So again, judging just by the structure alone without any specific bias, because if you read the news and so on, you can get influenced. Oh, the market is bad. Oh, this is bad. and things like that, then basically it suggests more upside is more likely, right? Doesn't mean it cannot drop. It's more likely to have more upside as long as we stay above 23,682. Okay guys, so that's the update. Now in terms of target higher, you can just use the retracement here and take the 1.236 external retracement, which is 25,026 as the next target. So between 123.6 and 161.8 is a potential target on the upside, 25,026 and 25,442. Okay guys, so that's the update for today, and I'll see you guys again next time. As always, if you want to get more regular updates, feel free to check our service. We have 14 days trial. You can use the link in the description of the video. I'll see you all again, and have a nice day everyone.